What is good, everybody? It's Friday, December 12th, 2025. Today was a pretty good day of price action, not gonna lie. I'll go over what happened and the two trades that I took. I ended up getting break even, and then I caught a win after that. So, coming into the day, starting with the 4 hour, let me go ahead and scoot this back. So, starting with the 4 hour, as you can see, we're kind of just still ranging in this like upwards channel, I guess you could say. We still have this daily gap above here, but yesterday we ended up edging Asia lows and then displacing off of nothing. So that stacked with all this LR down here, and we SMT'd these highs with ES. Let me show you that real quick. You can see we SMT'd right there compared to over here. We never took those. So coming in the day, I was leaning a little bit more bearish just because we're not really respecting bullish gaps anymore. So right, you look at the 1 hour. What are we doing? Not really creating any bullish gaps, but we were making bearish gaps and respecting those, right? We're wicking it, respecting CE, and then displacing down lower. Come in, and now we go down to the 15-minute. These 15-minute bullish gaps just literally got opened underneath, and then these 15-minute gaps were just disrespecting versus respecting. That's all I really need to look at. So today my bias was, I don't know why this is all the way at 10 o'clock. Coming in the day, we had, this is a 1 hour gap that we traded into, and then we ended up sweeping this. It was a 30-minute intermediate term high, right? So there's 30-minute high inside this gap. We sweep that and then displaced lower, and ended up creating a 15-minute inverse, right? Oh, this needs to go here. We ended up creating a 15-minute inverse, and then from here, so that's showing we're respecting this 1 hour bearish, we're disrespecting 15-minute bullish. We made two 5-minute gaps off of this 1 hour fair value gap. So I marked out both of these, and this one has already been used and this one hasn't. So this is an intermediate term high. If we come up here, I would just want to see us sweep this and not close above it. We ended up sweeping this low on ES. We never actually did. Sorry. You can see we ended up just generating liquidity at 9:30 on ES, so we never actually took out this low. So this was an SMT, and I'm expecting this SMT to just offer a rebalance for us to continue lower, because we have all this built up low resistance liquidity, and we're not in a spot to distribute higher yet, right? Like, we're not inside of any high time frame gap, like maybe a 5-minute, but that's considered low time frame because we're taking entries off of it, right? Like, you can use it in confluence, like if we're in this side, this 5-minute and a 15-minute, then sure, it just adds confluence, but don't base it strictly off of the 5-minute. So we ended up SMTing these lows, took it out, and then we ended up trading back up, and right here we sweep out this 5-minute intermediate term high, right? So at this point, I don't care about this 5-minute gap. I just care if this one holds. This one ends up holding, and we created a 2-minute bearish gap. So at this point, I was waiting for this 2-minute gap to get flipped to the downside, and we got a very heavy displacing candle right here, and we ended up making equal lows. So that's where I took my entry at when we inversed this. I got a really bad fill. My fill was around 80 right there. Stop loss was just at these body highs, because when we get those like or this high, when we get those like death candles like that, it tends to be, if we come back up to the top of them, we're just going to go remanipulate anyway. So we have our inverse, we have a liquidity sweep, and then we're also respecting a sponsored continuation gap, right? This gap's valid because it was created out of a 1 hour gap, and it's not just some random 5-minute gap along a leg. Excuse me. We also ended up SMTing these highs, so that's just added confluence. At this point, this was my break even right here, just because it's kind of like a data wick essentially. When we get that big of a candle, it's just a big imbalance of price, and it happens super fast. So that's where I went break even when we were around down here. You know, I wouldn't really, there's nothing stopping us from going lower, so I wouldn't necessarily want to see us come back up, because I would think that we're just gonna go take these highs before we go down again. I ended up getting break even on this right there, basically to the tick. So that was really upsetting, but it ended up playing out really well. And then I saw that, okay, so this failed. This was a clear sell model right here. This on the 1 minute, the 4 hour and 1 hour, we're starting to look like we're in a pretty clear sell model. Mostly down to this daily low is what I was wanting. This low inside the fair value gap right here. That was my overall draw for the day. So going into it, I was like, okay, I could get off here, or we have good price action. It's not even 10 a.m. yet. I might as well just wait to see if we get something clean. So was really patient, not really taking anything, not wanting to take this. This was complete pattern tricks. We're not delivering from anything. And this was a terrible trade as well. So I wouldn't take this ever, just because this is the 10 a.m. candle. Well, one, we have triple equal highs. If you know equal highs, they're like a magnet for price. And you never want to long or short against them. So like if you had equal highs, you wouldn't want to short. If you have equal lows, you don't want to long. We end up 10 a.m. I was expecting it to manipulate up, sweep out these equal highs, maybe deliver out of another 5 minute or something to then continue lower, but we ended up just displacing off and still not getting anything. This entry as well, I wouldn't take that just because it's you're delivering off of a discounted 5 minute gap. We created 15, still waiting. At this point, we had a new 15-minute gap right here, so waited for this to get traded into. And as you can see, as we're trading up into this, right, we keep displacing through every single low on our high time frame, right? So we're not just getting like a wick and then starts a big rebalance before going down. We're kind of just like heavily trading through these lows. Flushing through all of them, so I would expect just all these to go get taken, same way I would on a 1 minute time frame. If we start displacing through low resistance liquidity, it should all get taken at pretty much the same time. So I was looking at this, I wanted us to trade into this 15-minute gap and then have a stop rate inside of it, and then some sort of inverse for my entry trigger. And I ended up taking more of a discretionary trade today. So I didn't take this 1 minute, right, because where's our stop rate? We just hit our high time frame key level. This is the one that I want to get stop rated. So boom, there's our stop rate, right? So now we have this leg up right here. This leg is there, leg down, this black candle, and now a new leg up right here. So now we're just waiting on our inverse, right? Another thing to note is our PO3s. So our 1030 open, we had a wick down, but what did it trade into? Absolutely nothing, right? And then our 1045 candle right here, it traded into a 15-minute fair value gap, right? But we don't have a stop rate yet. But we're still overall bearish on the day, right? We're generating this low resistance liquidity right here. And we're very confident in our draw being lower. Biggest reason, right? These are all failed soups. So a soup is just basically like 1 point wick below a low and it just immediately gets bought back up. We're not doing that at all. We're just trading straight through all these lows. This one would be questionable, but at the same time, like, we're not delivering very heavily. So at this point, I'm very confident in the draw being lower. We have high time frame gaps, and now this is where my entry was, right? We sweep that high and then we displace below this low. So there wasn't a 30-second fair value gap on this leg, but there was a 15 that looked really good. But I don't trade the 15-minute time frame, right? So a CISD is just another confluence for an entry trigger. It's basically just saying that, hey, you have this breaker block right here. we're probably going to respect this. That's what I initially started out trading, was CISDs and breaker blocks. So I just entered right there, right? Like I'm a market trader. I don't ever place limit orders. My stop loss was just at this body high because we don't have any sort of SMT in here or anything. And if your stop is here, the only reason for that would be this wick, but that's just a rejection block, and it's already been used to propel us lower. So no reason of us going up there if we're just gonna remanipulate if we do. I have a breaker block, a fair value gap, and technically an order block, all holding us lower. So if all three of those failed, I wouldn't want to be in the trade anyway. And it's only like 5 point difference, 8 points maybe. So I just market entered right there. My break even was this low because on the 30-second, this was a low inside of a fair value gap, and this was our first stack of generated liquidity, all this low resistance right here. And it was just under a 1-to-1. So right here, we start to trade lower, and then see how we take all of this at the same time, and we displace through that low. I took one partial right here at a 1-to-1, and then I held my runner to this low. So I went break even at this point, expecting this fair value gap to hold us lower, which we trade back into it, and then we just blasted through that low, right? Because our high time frame draw was down here, and we ended up just trading lower. So things that you can learn, I guess, is our PO3, and when we're trending, just trade with the trend. There's no reason to try long anywhere on here, right? Like this would be a bad long. You kind of get this, but that's a terrible long because you gotta look at where we're delivering from. We're delivering from nothing over here. We just swept out liquidity, and the market moves off of liquidity and imbalances. So why would you settle for half of that when you need both? So right here, right, we have liquidity that we take out as well as an imbalance that we trade into. And then also for DOL wise, right, our draw on liquidity is clearly these lows once we can never seem to react off of one of the lows to go higher, right? So this low we go higher, but then we trade right back through it. So now I'm like, okay, there's probably less likelihood of us going to these highs than just continuing this high time frame sell model back to down here at these lows. But yeah, honestly, really easy day. Just had to be patient. Like I took this trade really late, one of my later trades for sure. 1050 was my entry, so pretty much right at where my cutoff is at 11 o'clock. But yeah, I'm pretty happy with the day. We have a free Discord that is just a couple of homies that we trade. If you want to join that, I'll put that in the link. I took this on my Apex accounts. They're a pretty good firm. They do pay out. But I'm really looking forward to trading my alphas, so I'll put that link below too. I'm going to save my PA for January because December is almost over. I'm going to be out of town all next week pretty much other than Friday, so Friday will be my last trading day of the year because, typically the week of December, like on Christmas and New Year's, there's not a whole lot of movement. Like price will look like just this accumulation area pretty much the whole week. So I'm not really trying to force anything, and I might as well just take the last 2 weeks off, right? There's no point of me trading bad PA when good PAs are around the corner normally in January. So yeah, I'll probably won't be uploading anything until then. If you have any questions though, DM me on Instagram. I'll put both of those below. And yeah, hopefully y'all had a great trading month, and I will see you later.